Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, December the 17th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that impacts the markets with some of my market analysis. And I do the same thing for you folks out there, but I go a little bit further, talk about option strategies I'm implementing into my portfolio based on the assumptions I come up with. For you, also, at Pro Trader Strategies, we have designed a streamlined process or a guideline for you guys to follow to find the optimal strategy for any given assumption. It's not just saying, hey, you got a bullish assumption, you go out and buy some calls. No, what we do is we dig into it and follow a guideline to find the optimal strategy. Sometimes it might be selling some puts or a put spread. So we dig into those details in webinars that I do on every Thursday. So check that out at 4 o'clock. We're doing webinars every single Thursday. So protraderstrategies.com, you can find out more information about that. So please check that out. All right, so without further ado, let's get on with some economic data. Yesterday, we had the FOMC meeting, said that they were going to keep interest rates unchanged for the foreseeable future. Bonds dropped off on the initial announcement, meaning interest rates started rising, but then they snapped back when they were like, hey, it is not going to happen anytime soon. It looks like the economy is starting to worsen. We'll look into the data today, and that very well might be true. So without further ado, across the pond, we got their own monetary policy. They left their interest rates unchanged for Great Britain. Then moving here to the United States, Philly Fed. We've been seeing these manufacturing numbers come off a little bit, and it is consistent today. Philly Fed coming in at 11.1, expected to be 20. No revision to last month's number, but this number being worse than expected, causing a little bit of pain in the market. Not a ton, but for the most part, people are starting to teeter on their bullish sentiments here, especially without a stimulus package. We also got unemployment claims coming in higher than expected at 885,000, expected to be 817. They also revised last month's number up by almost 10,000. So again, not making that headline number look any better. And then we also got some, what was I going to say with the, there was something else I wanted to really talk about. That was about it. All right, so building permits coming in at 1,640,000. Remember, building permits, they can pull as many permits as they want. We've already started to see yesterday in the housing numbers that looked a little bit iffy as people were starting to say that they got sticker shock. Interest rates starting to move on the high side. We've got prices of homes, historical highs and median house price around $318,000. So all of those coming together, we might start seeing this housing boom, or these housing prices and the housing sales start to slow down just a little bit. Housing starts in line with expectations at 1,550,000. Natural gas storages in line with expectations, a drawdown of 122 billion cubic feet. There we go. I got it all out. All right, let's move on to the overall markets. Despite the fact that we're seeing this slowdown in the economy, we're seeing crude oil move higher, trying to find out what's going on. They are increasing supply out of OPEC. Here in the United States, we are in full swing. Prices going higher. That's going to help out these oil companies. But what's making this drive higher? It's not demand at this point, but the weakening dollar. We've seen the dollar index go below 90, and that is really causing some of these assets that are backed by the dollar moving higher, as you can see with gold up $31.50 on the day, back into that little triangle that I created not too long ago. We're back into that. A breakout above would signal a much higher move here coming, and probably back into that 1923 area or in the 1900 handle. All right, bonds, as you can see, are coming off a little bit today. Finished very close to the highs of the day yesterday after Powell was speaking. And today we're starting to see some weakness here. Interest rates starting to uptick, albeit only slightly. VIX coming off just a little bit. Dow Jones Industrial Average up 91 points. Still haven't created this all-time high in the day session, so that's something we might be keeping an eye on today. NASDAQ has printed the all-time high intraday, so that is a good number to set up charts against, or just keep your eye on. Again, creating higher highs, higher lows on this rally back outside of this 2017 trend channel that I have in there that I'm just getting a kick out of watching. Anyway, E-mini S&Ps overnight high. We came up a half a tick shy of that today. May very well try and print that during the day session. It feels kind of strong to the upside today in the equities, despite the fact that we have not gotten good economic data today. All right, E-mini S&Ps. This is the overnight high. As you can see, I got those two charts switched around. We looked at the breakdown of the E-mini S&Ps before the day chart. But again, you can see it looks like it wants to start moving higher and create a newer high here, as it did in the overnight session, but would like to print that in a day session just for a solid number. All right, let's talk about some trades that I've done. EA Sports playing it to the downside. As you can see yesterday, we got a bit of a topping pattern. It's not a super clean one. It's for like writing a book about, but today an engulfing pattern to the downside. Looks like it might want to start to roll over here in EA Sports. So I went into the March, getting that longer duration, trying to get involved in a situation where I get volatility expanding. We got it really low right now, but it should start to expand in or around their earnings. So I can take advantage of expansion and volatility with my directional assumption. So longer term, want to go into the March, take advantage of expansion and volatility. We talk about those levers and pulleys in my webinars a little bit more in detail, but that's where I'm going to look to go to, is out there outside of 70 some days to expiration. That fits the bill for this March. It also will help me get involved in this expansion and volatility around that earnings. So with all that being said, the March bought the 130 the 130 puts in there. I don't know why I want to keep writing a call, but 130 puts for $5.65. Just looking for a little bit of a rollover here, maybe come back down to this point of control if we can break through this support level of the 78 Fibonacci there. But I do think if we start rolling over, that would be a good marker or line in the sand to get to. So I picked just slightly above that to try and encompass that. Also fitting in lines with the deltas that we would pick for a long put, increase our probabilities of success there. So all of those things saying, I think that this market might want to make a little bit of a correction and come back down into this little area that we've seen here trading, which would line up with this volume node here in EA Sports. So just looking for a small pullback there, try and take advantage of a correction in the markets. And then PENN. I didn't cover this trade yesterday. The market was moving higher and literally looking to make new highs, and I still wasn't able to get my short call, my covered calls. I was looking to sell the January 110 calls in there, but the pricing wasn't really commiserate with what we had seen earlier on in the day. So I was like, I just pulled the ripcord on it and said, or pulled out of it, just canceled my order. Today we came up and tested a new high almost at $91 there. I decided to take advantage of the opportunity to do some covered calls in there at that point, and did the January 120 calls in there for $1.23. Trying to lower my overall cost basis on this trade continuously. As you can see, I've thrown in some new Fibonacci's in here, and if I were to get up there to the 120 calls, you can see that is a massive extension there on the chart. So getting above 2 Fibonacci lines in the sand there. So I believe that I'll be able to get that done within the next 30 days. I don't think that we're going to have that much of a rally. It's going to be feeling like it's really overextended if we get up into the 110s or something like that. So another reason why I was trying to pick those 110s to get above that Fibonacci. But now I'm even higher and above 3 Fibonacci lines, which is very nice, actually. So that's it. That's everything I've done today in my portfolio. Added some EA Sports to the downside. Added a covered call strategy to those long stocks I have in my IRA, trying to work all of these things together to take advantage of the different situations we have going on in the markets. All right, so staying mechanical in one, taking advantage of low implied volatility with the expectations of implied volatility going higher here in the new future, especially in EA Sports. We start seeing this correction start to happen like I am expecting here. All right, that's it. Check out the webinar today. Like I said, it is going to be on, we do webinars on Thursdays, and it is going to be on the broken wing butterfly. Really great strategy, especially if you want to eliminate some directionality to the butterfly. You expect the underlying to stay kind of tight range, which is what you really need to take advantage of some of these butterflies, like this one in particular. But we're going to be able to eliminate one directional move, whether it's bullish or bearish, with these broken wing butterflies. So check out all the rules that go involved in or that we're involved in with trading these types of option strategies. All right, please take a moment to go over our disclaimer there, as we are an educational company. I'm just trying to give you guys what I have learned over my 25 years of experience in increasing your probabilities, increasing that yield in your portfolio by following these guidelines that we have set out for you guys. All right, so that's about it. Check out the webinar today, and otherwise, if you can't take that, take it easy.